Members of the Sierra Leone Chamber for Agribusiness Development have expressed dissatisfaction with some government policies that are slowly killing private sector investment in the country. The executive secretary told a news conference on Friday that the central bank unproductive and unfruitful cash withdrawal limit do not only work for Sierra Leone but are actually out of contest for the country. According to him, the bank governor should note that Sierra Leone economy is a cash economy and not a cashless economy where private businesses do their transactions online. The executive secretary went on to state that the current policy should also serve as a hindrance to investment and also the potential to scare away and deter meaningful investment in and out of Sierra Leone. It further noted that their organization is seriously affected and suffering due to what he refers to as a bad monetary policy. People go to the bank and they are denied to get cash and mostly delay by requesting people to divide checks to a number of withdrawals.
Gentlemen, the most, bizarre of all of this, we've been working to get government to support, to set up an agricultural or entrepreneurship financing to be able to support the agribusiness private sector, the private sector in general. But that's not happening. What's it all is the new policy, the monetary policy of withdrawal cash limit introduced by the Bank of Sierra Leone, or the central bank. And honestly speaking, that policy is a non-starter, and I would say in the short before it's killing businesses. Let me make one instance. Recently, when these things are imposed, a poultry farmer wanted to go and buy feed. The chickens were already starved. And we are living in a cash economy. If you don't carry cash anywhere, you give check to people don't have time to go to cash check. Because the problem of bureaucracy, sometimes, the difficulties, increase in transportation and transaction costs and all of this. So people don't want to do that. So this poultry farmer had to check about 10 million, 15 million euros to go and check and cash at the bank. And then, unfortunately, he was refused to cash this check. And then they said he or she has to divide that check into 15 portions, 15 checks. And then pleaded. In fact, some other she had wanted to give envelope, which shouldn't happen in the commercial banking, because we see them as private sector players. We see them not to be people or institutions that should. But then the long and short of all of this, she was delayed for over three days. And you know what happened? By the time she got her money, it was weekend, and then the next week, she lost almost over 50 to 75 chickens. And what happened also, in the agricultural sector, when that delays happened, what happened? Most of these chickens were already getting some kind of diseases. So she has to go also to vet, spend more money to get to vet, for them to be able to treat this. So it costs her more money by the time she gets this money. So you see why we say this cash limitation, or cash withdrawal limit is not fit for this country. Because Sierra Leone is a cash economy. It's not a cashless economy. We are not dealing with an e-economy. You go to buy goods daily to any SME or businesses in this country, they want cash. So implementation of cash withdrawal limit basically is a recipe for chaos, and it's a recipe for businesses to close, and it's much more, will create more problems, because the bank governor and his team are view that when cash limits are imposed, what happens? So it's to limit the hoarding of money. But let me tell you now, it has even now increased, because all the agribusiness private sector players have even determined or vouched to close their account and then run their own banks in their own homes.
He went on to state that the Chamber has been making efforts to advocate to increase not only access to affordable financing, but seeking the support of financial institutions and the government to create a financing institution to support production, industrialization, and export market that will create jobs and wealth and ensure overall economic and inclusive growth.
And key element that we should be able to use, inputs that we'll be able to use to turn around the sector is access to finance. But if the financing institutions are not ready to support that sector, it's a problem. Secondly, the loans that the commercial banks give are short-term, and the interest rates are also very high. Many times we have trumpeted this, but the government, the commercial bank, the central bank are not ready to work with us for us to get that right. But what beside the agriculture sector that is more huge, we have other value chain actors that play. Even you, the press guys, or you, the members of the Fourth Estate, you are partners along the value chain in promoting it.
For Star News in Freetown, George Elliott Sam reporting.